I want to go to the trading floor in Chicago and visit with Scott Gecas. He is with the Fox Group, and he joins us right now. So obviously, not much going on in the corn market so far. And it looks like the big mover is going to be the wheat, and it's to the downside today. I know for a long time they were talking, Scott, about the fact that Chicago wheat had quite a run up, and there was some fear that maybe it was getting a little overheated. But is this about enough of a correction, in your opinion, when you look at it, or what's driving the downward momentum today?
Yeah, what is specifically driving the downward momentum in wheat today is the strengthened U.S. dollar. We had a big run in the U.S. dollar, which that is expected running into FOMC today. So that whatever is going to come out of the FOMC today is going to dictate which way the dollar is going to move, which should affect the wheat prices one way or the other. But if you look at the overall trend, the technicals, the trend is still to the upside. There's still strong demand for U.S. wheat. So we're going to continue to watch that. We're watching that 560 level. If that 560 level is broken, we expect a little bit of volatility, a little bit of pressure. But if we can stay above that 560 level, we expect that uptrend to continue. That is confirmed by some of the option flow where we've seen the 560, 580 call spread trade right on the open about 200 times or so. So that is just adding a little bit of upside momentum to the price movement. So we're going to wait and see what happens with the U.S. dollar as well as the FOMC. But across the board, everyone is really concerned about this coronavirus. It's spreading. It's already surpassed the SARS epidemic that happened in China a few years ago. So, that's definitely a concern, and that's what the markets are going to be focusing on in the short term.
Lots of stuff going on, that's for sure, and we'll keep tabs on everything as it happens here today. So, Scott, we're going to take a break right here, and then we're going to come back and we'll take a look at this livestock trade on a very important day, USMCA Day, and we'll take a look at the livestock with Scott right after this. We're back. We're talking with Scott Gecas of the Fox Group in Chicago. And as we shift our attention now to the livestock trade, let's take a look at our futures here, Scott, and get everybody updated on what's going on right behind you there on the trading floor. We start with our live cattle board. And currently on the live cattle, a quick look shows that the nearby February contract is just a touch higher. It's up 13 cents at 122.28. More of your action, though, is going to be in that April contract, and it's actually very quiet. It's down about 8 cents at 120.63. Remember, we had some limit down closes on Monday, and then a rebound on some of the contracts for a little while yesterday. We have the June contract on live cattle down 7 cents right now at 112.40. So a mixed affair going on here. On the feeder cattle market, let's switch over there and take a look at feeders, where we have the January up 20. March is up 15 at 135.55, but the deferred's just a touch weaker. May and August are at least 20 cents lower. And on the lean hog trade, well, as things stand right now, we have quite a few triple-digit losses today. The April contract down $1.42. We're at 69.88 now, and May down $1.43 as well. We're at 76.22. So when you look at these from your perspective there, let's pick out this cattle market here first. What is weighing on it here today from your perspective there, from what you hear?
Well, for the cattle market, in my opinion, we're just looking at the cash trade. So the coronavirus is affecting demand slightly, with the restaurants as well as travel. People are just not willing to go out and spend a little bit more and go out and actually go to the restaurants and go to other areas with the restaurants. But, what we're really focusing on is the break into cash from 122, even though it traded from 124 to 122, very light at 122, but it's still a little bit of break. With the funds really net long, they have a large net long position. We're going to look for that liquidation aspect to come into play. So in the front month, we have to hold that 120 level. If we break that 120 level, we're looking to test around 118.5 or so. Other than that, that's the biggest story that we're looking at in the cattle. And as far as the hogs go, it's the coronavirus. That is the main thing that we're looking at. Still strong demand in China. U.S. has ample amount of supply, but they're just not getting those exports. And we don't expect those exports to show up, especially as this coronavirus is continuing to spread. Again, it's already surpassed the SARS epidemic. So if that gets under control, which it doesn't look like it's going to happen anytime soon, we expect a little bit of downside pressure in the hogs.
Okay, now on the cattle side, do you expect to see maybe a little weakness in that cash market here this week? We have that big inventory report on Friday.
Right. So with the cash trade going up to the report, we're going to be watching it very close. If we see it at that break of 122 or testing around that 120 level, we expect to see that long liquidation come into in full effect.
Okay, well, thank you, Scott, for the time. Scott Gecas of the Fox Group. He's located right there in Chicago at the trading floor where the action's all taking place. Well, Janet, that's how the markets are shaping up as we